let's get them approved. Let's get them to be approved before they sign, so the bank can review the separation agreement and all that stuff. So it was really, really cool. And I've learned a couple of things over the last 10 or 11 years that I'm going to share with you. And feel free to ask questions. There's no stupid question. We're going to try and get through a lot of this. There's a lot of slides. So what I do when I have downtime or when I'm bored is I just write or add to my presentations. So they will get longer and longer and longer, but they're also very relevant. And Marianne, if you don't mind, by quarter to two, just let me know, because what I want to do is slide 38 is the most important slide of this presentation.
Okay, we've got to get to it. Okay,
yeah, so
I'll let you know.
People do that. So my advice to everyone is very, very simple. I say this to clients, I say this to lawyers, I say this to real estate, I say this to everybody. Follow your gut, work with a mortgage professional that fits your needs, and build a relationship. It's very simple. And if there is someone, a banker, another broker, someone in your family you have like a really good relationship with, and you just jive and you understand each other and you can disagree but still have a wonderful ongoing relationship, that person should be in your Rolodex. Use that person and have that person in your cell phone and call him or her up when you have questions. And that's the type of relationship that everyone needs with a mortgage broker. So today's presentation is every mortgage conversation needs a broker and education process to rebuilding. So typically when people are separating or divorcing, they're trying to get their house or buy another property, and we help them essentially do that, but they often want to rebuild their wealth. And so this is going to cover a lot of this. And here's my contact information. So if you ever want to email me or call me, I'm easier to get on the telephone. So just call me if you have any questions. The phone is usually on. If you don't get me, leave a voicemail or send me a text and I'll get right back to you. So this has been an amazing year. So we're at about $75 million in mortgages funded, which is insane. 85% of that is separation and divorce. We were just voted top 5 mortgage broker in the country, which is incredible. And we're the top mortgage broker for the service of separation mortgages. So we do the most amount of files for this type of area in the country. We get a lot of people across Canada, more so in BC, that call us every day to help them with files. And we just give them the answers to make sure that their clients are well taken care of. So let's celebrate. So what do? I love giving back. So we do an annual backpack drive. Those of you that know me, I love the Jays. I think the Jays are amazing. And so the Toronto Blue Jays donated 60 backpacks, 60 hats, and 60 water bottles. And my kids and we filled those up and we donated them to kids with incarcerated parents. We do this every year, but this is the first time that the Jays have given us backpacks. So because we do well, we try and do even better for our community. And then someone said, well, what about the caregivers? So we provided a $50 gift card in every backpack to be given to the caregiver, because if you have incarcerated parents, plural, then you have a caregiver. So we thought, hey, why not give the caregiver a bit of a treat? And so that's one thing that we do. And we've been doing this for like 9 or 10 years. And it's something I'm really, really proud of and something I like to share with others. So introduction, you'll know a little bit about me, industry overview, case studies, Q&A. Hopefully we get through all of this. I'm a licensed mortgage agent. I write for LexisNexis. Those of you that know or subscribe to it, I write for the Family Law Module series. I'm an associate member with the York and Durham Collaborative. And my primary focus is on separation mortgages and tax. So those people that have tax issues and own a property and want to pay back the CRA. So that is a service that we've created, and I'm collaboratively trained. So I've done levels 1 and 2. Follow us on Instagram. So you tech savvy people who are on social media all the time, that is my handle. I think there's 3 posts that we do a week.
Duff?
My favorite is Motivational Monday.
Duff Cameron, sounds familiar.
So we
Oh,
start.
her. Yeah, yes. The white girl.
So we start the. We start the week off right and provide some motivation, and then there's like a couple of tidbits of tips and tricks that we give to people throughout the week. So what's a separation mortgage? It's a unique service to specific people. If you are married people who are in the process of separation and own a home, common law couples with or without a cohab agreement who intend to purchase a property together, couples who have already separated and want to purchase or refinance a property, relatives or business partners who own a property together and maybe want to divide the asset. Sometimes brothers and sisters no longer want to be, business partners, and one person wants to keep the house and another person doesn't want to, assuming this is a rental property. Or any property for that matter. Some people want to be bought out. So we handle pretty much all that, and we handle people who we talked about have tax issues. So there's never judgment. People sometimes owe the CRA that tax for insert reason, and so we know the banks that will provide financing for them to pay the CRA and for those people to move forward. And I can tell you, you don't want to be in trouble with the CRA. They're some nice people, some not so nice people. So we've been able to create bridges in order to get people what they want. What is our role? Our role is really just to get people a mortgage. However, it expands. It is to provide people with various options, explain the terms and the conditions of every possible solution, and instruct them on the necessary steps in order to qualify. You'd be surprised how many people have a mortgage and they don't know what the terms and conditions are. We always say the best thing to do is to think with the end in mind. I'm going to get this mortgage for $1 million, or I'm going to get a mortgage for $500,000. Amazing. How am I going to get out of this mortgage? Can I get out of this mortgage? Can I refinance this mortgage with another lending institution midterm? So it's really important that people understand that sometimes when you get signed up for a mortgage, that the bank, that all the terms and conditions are in favor of the bank, and then sometimes the terms and the conditions are in favor of the client. So we do our very best to inform them of there's essentially maybe two types of mortgages or several types of mortgages. You want the mortgages where you're in control if something was to happen. So moving along, so a little bit of myth versus reality. So we hear a bunch of stuff. Should I use a broker? Should I not use a broker? Can I just use your bank? You should really think of your mortgage broker as your banker. Not to say that you're going to be depositing checks with him or her, but because we have access to everyone, including the banks, we can probably just get you a mortgage with your home branch. And so that's one way people think about us. But some of the myths are like, oh, I'm going to pay a higher rate with a mortgage with a broker. I'm really scared to use a broker. My bank is better. We've heard a lot of different things. We always just say, look, follow your gut, figure out who you want to work with. If you want to work with your bank because there's an ongoing relationship, amazing. Use your banker. But there's a lot of things that brokers offer, including a wide variety of solutions. We're very much client focused. If clients are, pro green bank, amazing. But in the process of separation, what ends up happening is if two people separate and they're selling the matrimonial home and each person needs bridge financing, they need to go to two different lending institutions. This is why you need a broker, because a broker is not just the green bank, he's the green bank plus every other bank. So when they're selling the primary residence or the matrimonial home and they both need to bridge, guess what? We can make that happen. And for those of you that don't know, anyone who owns the primary residence or the matrimonial home needs to sign the bridge financing paperwork. So it's always nice to be, it's always advised to be nice to your ex, because your ex is going to need to sign your bridge documents, as you will need to sign your ex's bridge documents also, because you both own the property. And then we talked about sometimes we need appraisers. A good broker has relationships with really good appraisers and can help if the situation arises. And I always say we always have solutions. We're very much solutions focused, as I know a lot of mediators are. A lot of mediators and a lot of lawyers are very much solutions focused. How do we make this work? And they figure out ways to do it, just like a good mortgage broker will. Other myths, sometimes people are like, oh, I only need a mortgage broker if I have bad credit, or brokers charge fees, like all this crazy stuff. And so the reality is we primarily deal with high net worth people, my office anyway. Do we help people with bad credit? Sure. Do mortgage brokers charge fees? Absolutely. But do they charge fees all the time? The answer is no. Usually I would say 95% of the time in my client base that the bank pays my brokerage something called a finder's fee, and that's how we get paid. Do we charge people fees? Yeah, sometimes we do, but we tell them upfront, and there's about 3 or 4 documents that the client needs to sign and acknowledge before we move forward, so they understand what the fees are well in advance of us doing it. So there's no surprises at the end. We've all heard those stories, but I think sometimes stories are a bit of a tall tale, unfortunately. So moving along, when to get us involved. I always say get us involved early. Why? It allows us to determine affordability. Right? Can the person keep the matrimonial home? Do they want to buy another property? Do we need to provide them a pre-approval? Do we need to repair credit? Sometimes people in the process of separation and divorce aren't making payments to credit cards. We suggest always make your credit card payment, always make your mortgage payment. But sometimes people are making their mortgage payments or their credit card payments, but their debt limits or their debt balances are high. For example, your credit card, you have an available balance of say 10,000, but you owe 9,000. That creates debt pressure. So your credit bureau or your credit score will start to decrease artificially. So we often say to people, get us involved early, just so we can figure out what's going on and where we need to be in order to help get someone from stage A to stage B. And then, can clients pay for or afford a property if they're paying or receiving child support or spousal support? So we do that analysis for a lot of people. So quite often people want to know what if they're going to be approved before they sign the separation agreement. Sort of makes sense, right? I want to know that I can do this before I sign on the dotted line. So that's where we come into play. Other things, how to introduce us. I always say just email introduce me. Best way. What I always do is I do a reply all, so the referring party knows that I've reached out, and eventually we will take that person or the referring person's name off the email thread, and then we will move forward and schedule a call. Very responsive. I've been told that by a lot of people, and we work with all the banks and non-banks, and I've always said that we're very solutions focused. So if there is a solution, we are going to find it. Usually they're pretty. A lot of separation files are very similar, but there are others that are a little bit more challenging, and creates we just need a little bit more time and have to put our creative thinking cap on. So types of scenarios. So this is basically what we see all the time. So guarantors. So does the client need a guarantor? So someone wants to buy a house or keep a property. Do they need a guarantor? Do they need a co-signer? So there's obvious differences between the two. Guarantor on title may have a possible capital gains exposure, right? So we often suggest, to decrease or eliminate that, maybe you just put that person on title for 1%. So if there is a capital gains exposure, that the gain is very, very small. You can also create, a bare trust or a trust agreement that says, hey, you know what, Marianne is co-signing on my house. Awesome. Love you, Marianne, for doing that. She's actually not, but in this, fictitious situation, she is. We want to make sure that the person that's guaranteeing the mortgage or the co-signer isn't going to be receiving a bill from the CRA for capital gains. So we can create a trust agreement that says Marianne's only on the mortgage or only on title of the property because I need to qualify for the mortgage. So that helps. A lot of people actually don't know that. Sometimes people put guarantors on for 50%. That's actually not something you're supposed to do. Other things, the narcissist. I love this. So I don't like narcissists, but I love, we've done I think 8 or 9 narcissist files this year. And what we've realized is they have a similar pattern of behavior. And so, they always want to be in charge. I think every file that we've done, it's always been the guy that's been the narcissist. Damn. It's probably, I don't know what's going on with us men, but so we figured out that with every file there's a pattern of behavior, and so typically what happens is they want the last word, or they want to make sure that they have everything that they need, and they often will hold up files, and they will often delay things. And so we've prepped clients and we've prepped lawyers and mediators, and just providing just some nice advice and nice tips. Hey, this is probably what's going to happen. And so clients really appreciate that. They really like the experience where we say, hey, you know what? They say they're going to sign in 2 weeks. They're probably going to delay it for the following reasons. I'm not a psychologist, but experience does hold a lot of water. And so we actually have a client right now, and we've explained to her what we see happening based on previous experience. So that's kind of nice too. But with a narcissistic client, sometimes comes a situation where the guy's on title, so the narcissistic male is on title of the property, but the female is not on title of the property and not on the mortgage. And this often happens. So of the 8 files or 9 files that we've done this year, 6 of them have been where the separating female or the separating spouse hasn't been on title. So what do the banks look for? Banks really want, if you're not on title and you want to be on title of the matrimonial home post-separation, we have to put together something called a purchase agreement. All banks want a purchase agreement. And then the lawyers are just like, well, wait a second, if my client is going to be purchasing the property, is there going to be land transfer tax? The answer is no, it's because it's his or her primary residence. So there's going to be no, what we call LTT, land transfer tax exposure. What we do in the purchase agreement, the purchase price is the consideration value. And then we always add to the purchase agreement that all benefits go to the buyer. So if our client is the buyer, we want to make sure that that's in there, because sometimes there's a benefit or a miscalculation, and the lawyers may not know what to do with that sort of slush fund of cash or that extra little bit. So we just say all benefits go to the buyer. So here's some little tidbits of information. You can download a simple purchase agreement online. And if you have any questions with it, happy to discuss further. But if you have a good mortgage broker in your Rolodex or on your speed dial, you also need a good real estate lawyer on your speed dial, because not every real estate lawyer is knowledgeable. And so sometimes people like to create work and headaches. So we just try and have a team of people around us and around our clients to make sure that things run smooth once the separation agreement is completed. So moving on. What happens if you have a client that, they have a maiden name and then they have a married name, and they're trying to decide, hey, you know what, I no longer want to be Mrs. Smith, I want to now be Ms. Jones. So, banks can proceed with either the maiden name or their given name or their married name, but what we have to do is we just have to decide, or the client needs to decide, what name do you want on title of the property? Awesome, step 1. Then step 2 is you need some sort of government issued ID, not a health card, that can prove your identity. So if everything is in Mrs. Smith, so Mary Smith's name, great, but you want to change it to Mrs. Jones or Ms. Jones's name, you need like a piece of ID that says Ms. Jones, because not only is the bank going to ask for that, but your real estate lawyer is going to ask for that. So if you can do a little bit of the pre-work, maybe you have to go to a Services Ontario and ask them and get that paperwork sorted, and they will probably issue you a new driver's license. I don't know how long it takes, a few weeks, maybe a little bit longer now with COVID, but so just to prep you and your clients for that. So that is the thing we often ask, hey, like, do you want it in your name? Do you want it in maiden name, or whatever the case is? Other scenarios, we're often asked, what's the difference between a separation mortgage and a refinance? Quite often, a separation mortgage involves 2 or more people that own property, and 1 or more of those people want to be removed from the ownership. And so a typical refinance is, two people or one person that owns a property and they just want to take equity out or do a debt consolidation, stuff like that. The separation mortgage involves a signed separation agreement if they want to keep the matrimonial home. Can you buy a property without a signed separation agreement? The answer is yes. However, the answer is only a few banks will allow you to do that, unfortunately. Every bank has different, what we call lending policies. And so some banks will allow you to do that, other banks will not allow you to do that. And then we often are asked, oh my God, so if I don't have a signed agreement, is my rate going to be more? The answer is no. It's whatever the rates are with that lending institution, right? Rates are generally speaking about the same no matter where you go, but it's the solution that people are really after. And so, when we talk about a refinance, it really doesn't require a signed separation agreement because people aren't really separating on a normal or typical refinance. And then what else do we have? So here's two possible cool solutions. So when I'm up late at night, I often like to think because, who needs sleep when your anxiety is running wild? Don't tell my personal insurance company that. But anyways, jokes get worse. Stick around. It's 1:23. You might want to have a drink. Jokes get a lot better. And so Marianne is laughing. It's true. So we sort of figured out a couple of solutions. Like how do we my team and I are often brainstorming, like how do we help people? Like how things are changing, like lending guidelines are getting more strict. How can we help people who want to ultimately keep property or want to purchase property? And so sometimes we have to help the person who wants to keep the house. Sometimes we're helping the person who wants to buy another property. Sometimes we're helping the guy, sometimes we're helping the girl, and sometimes we're helping both. It really just, the answer is it sort of depends. So we created a couple of unique solutions. One we call prepaid support. And so what is prepaid support? So let's assume that you owe child and or spousal support. So you can prepay the support for, say, a year, as an example. And so, the separation agreement will, and I'm not a lawyer, so this isn't independent legal advice, but we have seen separation agreements where they've said, okay, well, Mr. Smith does not owe spousal and or child support, but it may be reviewable in a year. So in the eyes of the bank, guess what? There's no liability here. The person that is paying child support no longer has that liability in the application. So it in fact helps them be approved for a mortgage. So it may come out of tax implications. So we always have to be conscious of that. So if you're prepaying support for a year, is there a big tax implication? Not an accountant, so I can't really give tax advice. I would assume not so much, because if you're paying, let's say $15,000, or we'll just call it $12,000 in child support, and you're prepaying it for the year or for that tax year, it's the same as paying 12 $1,000 payments. But if you're prepaying it for 2 or 3 years, is there going to be a tax implication? Yeah, probably. So we have to figure out that we're comparing apples to apples when we talk about a possible tax implication. And I don't think child support is taxable. Yeah, thumbs up for Marianne. Awesome. So sometimes people are like, oh, I'm just going to prepay my child support. Awesome. Right. So there's a situation there. Or and then what ends up happening is, so if you're paying, you're prepaying it, maybe you don't have the funds in your bank account to pay your ex-husband or your ex-wife the prepaid support. You can maybe just add it to the mortgage. Right. So if you owe them $12,000, then you can have that part of the buyout, or and you can have those funds directed to you from the lawyer's office. So it's really how do we make that work? With respect to the separation agreement, I wouldn't necessarily say that things were prepaid. Maybe you want to find out better creative wording to that. Just a heads up. But other things, what you may want to look at is the 2-tier buyout. So obviously the stress test has not been amazing. We're going to get into that. So a lot of people, what they're doing is they're saying, okay, well, you know what? I really love my ex-wife, and she's going to keep the primary residence or the matrimonial home. She's going to stay there with the kids. It's going to be awesome. I need a partial buyout today, and I'm okay to have another lump sum payment down the road. And so what that does is, that really creates a better cash flow for the person keeping the property, because they only have to pay a mortgage for a certain amount of funds versus a bigger lump sum of money. Sometimes we've seen separation agreements where, they receive the separating spouse will receive, say, $100,000 today, and maybe in 2, 3, 4, whatever, 5, 10 years, or when the house is sold, they'll receive another $100,000. So, sometimes people will charge interest on that $100,000 that is payable later. So this is why I said possible ROI, return on investment. So it really just depends on how it's structured. Right. I'm not here to tell people if they should be receiving interest or not, but every situation is vastly different. And so you can do that if the people are open to a creative solution. And you'd be surprised how many people are. There's a lot of people that actually just don't care about money. There are others people that exist, and they're just like, yeah, I'm okay to get this additional funds in 2, 3, 4 years, and maybe we'll just add some interest to it. Who knows? But that's something that a lot of people are doing, and I think that's really awesome if that can happen, especially if it creates a really amazing co-parenting relationship and it keeps kids and families closer together. Other things. So this is a little bit of our process. I just want to make sure that I have this correct because can't see process with a real estate lawyer. Okay, awesome. So on the one side, we have the mortgage broker. So the mortgage broker, we provide the approval to the client reviews and signs everything with us. We walk through them, everything pretty much line by line. We send everything to the bank reviews everything, and then they will instruct the lawyer. So typically, some banks will instruct the lawyer right away. Some banks will only instruct the lawyer 6 days after they receive the signed separation agreement. So we try and figure out, does the person who is being bought out, as an example, do they need funds in a timely manner? So we need to match up lender with the appropriate client. And then sometimes we want to make sure, and other times we want to make sure that the funds being directed to the ex are provided in a timely fashion. And when we're on the receiving side, so we're helping the client who's going to be receiving the funds, we want to make sure that the funds are being sent to our client in a timely fashion. Also, because he or she may be buying another property. And so we want to make sure that there is no overlap and that our client can close on time. And so we want to make sure that happens. So quite often we often suggest that you may just want to have one mortgage broker helping both clients. So both clients can then have clear communication with that broker. And that broker can tell both people, hey, you know what, we're going to have funds on a certain date. That's a question that we have all the time. Like, when am I going to get my money? When am I going to get my money? I'm trying to close, right? Like all this other anxiety happens. So the real estate lawyers are great. Some real estate lawyers will act for one or both separating clients. And that's really important to understand. So if you can get a client or a real estate lawyer that can represent both, then there's less real estate fees. Amazing. If they're acting for one, then the other client needs their own real estate lawyer. Obviously, that comes at an additional cost. And so the real estate lawyers that we use, they've said, we're happy to represent both if there's no conflict. And if there is a conflict, then the other person just needs to get their own real estate lawyer. Usually they follow their guts, and if it's really contentious, they just want to stay out of it, and they just want to represent one person and have less headaches. Documents, so the bank will send documents to the real estate lawyer, and what we call instructions. These instructions have a list of things that need to happen, including, hey, guess what? Mr. Smith is going to be paid out $200,000. And you need to direct those funds to him or her, right? So there's specific instructions that are on there, and they will get a copy of the signed separation agreement, and they will review it, and they will, the lawyer themselves or the real estate lawyer will act accordingly. What do clients need to provide to the real estate lawyer? Really simple: 2 pieces of ID, property tax bill, signed separation agreement. Pretty simple. Right? So a lot of clients will always ask us, like, what's sort of the tail end of this? And we know the process very well, and we will inform them of that information. Hold on, so I'm trying to get my cursor. Amazing. What's the different, how banks look at spousal support as it relates to income? So Bank A and Bank B, no pun intended on the Bank B, just like Bank One and Bank Two. But some banks will look at child and spousal support at 100% of the value. So Mr. Smith is receiving $1,000 each and every month in child and spousal support. The bank will use that as 100% or $1,000 of additional income. They will now use 100% of what we call CCB, child tax credit. I think it was, when I was growing up, I think it was called baby bonus. That's how old I am. I age well, by the way. And then some banks will say no support payments required, only a signed separation agreement prepared by a lawyer with independent legal advice. So what I mean by that is no support payments required. So what I mean by that is there's no track record that's needed, right? So some banks will just take the signed separation agreement at face value because that's part of their lending policies, which is really amazing because not a lot of people are paying child and spousal support payments before the signed agreement, right? So there's no track record. Bank B or other banks, they will only use 30 to 50% of the support payments, right? So that's a big difference. So sometimes people are like, hey, you know what? Like, I like the Purple Bank. Purple Bank's great, awesome, but I need to use 100% of the child and spousal support payments. Well, guess what? You can't go to the Purple Bank. Maybe you have to go to the Blue Bank, or maybe you have to go to the Red Bank. Most people do not care what bank they're with as long as they have a good rate and that they have a solution. No one really cares what logo they have on the annual tax bill or the annual mortgage bill that comes to their in the mail. And then other banks will only use 100% of the child tax credit or the CCB if the child is under 15 years old, right? So, and then other banks want to see 3 to 6 months of support payments, the history of support payments for 3 to 6 months. So when people are like, well, what's the rate? I always say, well, what problem are we solving? Because right here, we're probably solving 2 or 3 different problems. And so with our experience, we will say, okay, so we ask a whole bunch of questions. Are you receiving CCB? Are you receiving child and spousal support payments? And based on those answers, we know which banks to proceed with because our lending scope narrows. And then we say, okay, guess what? 2 banks are going to approve this file based on your unique situation. We can proceed with Bank A, the Red Bank, or the Yellow Bank, or the Yellow Bank, or the Green Bank, or whatever. And then clients understand that because we provide them with information and education and all that stuff. And we're at 1:35, so I'm going to take about 10 more minutes. Buying post separation. So we see a lot of these files. So we see people have separated. We'll say, I'm kind of like picking on Mrs. Smith in a nice way today. So Mrs. Smith, she kept the matrimonial home. Awesome. Sometimes she finds a new partner. Great. As long as she's happy, the only thing that really matters. This new person comes in and says, hey, you know what? I've been living here for a year or 2. I would like to buy into the equity of this property. What do you say? There's a mortgage for that. There's a solution for that. And then sometimes we can save on the land transfer tax. Sometimes we can't, because if you're buying into the ownership, there might be a land transfer tax exposure. There's a couple different ways on how you can save that, which I'm not going to get into. But and then can the new partner be own some or part of it? So we say, okay, well, do we get an appraisal? Have the 2 of them determine what the value of the property is? Is it a 50-50 ownership? Is it 60-40? Is it what's the structure? And we often recommend that they get a cohab agreement in place so they understand the rules of engagement. We typically find people that are they're more open to a cohab agreement if they're on their want to say like second spouse or new partner post separation, right? They understand the value of this. So other times, Mrs. Smith wants to sell her residence. She's met a new person. The new person and her have decided that they're going to sell the house, or she's going to sell the house, and her new partner has a little bit of money, and they're going to buy a new place together. So is it fair that Mrs. Smith puts down $1 million, her new partner puts down $500,000, and it is a 50-50 split? In my opinion, no, but I'm not everybody. Quite often what people will do is they'll put down 500,000 and 500,000, and they will be 50-50 owners and have a larger mortgage maybe. And then Mrs. Smith can take the rest and invest it. But sometimes they want just a really small mortgage, so the ownership structure will be 60-40 or 30-70. Sometimes it is 50-50, even though there's a disproportionate amount of a down payment, but her new partner will be paying all the bills of the property for the next 2, 3, 4 years, whatever they've determined. So we often bring in another professional or another mind to consult on this in order to give them information that they both know and understand. So we want to make sure that things are fair and people don't feel cheated if they're going to be like, there's no what we call lunch bag letdown, right, or buyer's remorse, so that they understand what they're going through and they can make a clear decision in time. So we always say, here's the information, we've explained it to you, take a few days, think about this, take a step back, deep breath. There's no pressure here, but we want to make sure you're making an informed decision. And people really like the no pressure tactic. It's not like, hey, guess what? This deal's going away tomorrow. No, it's not. So we're just here to provide that information, and people will always come back to people that provide them with really good information. Most common questions. Do you work with self-employed people? Sure do. So if you're self-employed, you take a 2-year average of your income. And so if you're self-employed, you have a really good benefit. One of those benefits is you can write off income. So the banks will use the net income, so the lower of the two, but they will gross your income up by 15%. If, however, you are incorporated and you provide yourself, or your corporation gives yourself a dividend, some banks will increase the dividend by about 20%. That's another benefit. It's awesome. So, but we always need a 2-year average of history. So we will always ask for a bunch of documents. We are often introduced to clients' accountants, and the accountants will email or transfer us the documents that we need in order to provide an analysis. So don't stress the test. So mortgage stress test went up, I believe it was June 1st. Small slide. The stress test is really nothing to worry about. It's the equivalent to a pimple on a 14-year-old's face. It's really like, it doesn't matter, right? Like, people will get over this. It was 4.79%. Now it's 5.25%. Big deal. So what does that really mean? It means your buying power probably decreased by about $25,000. And so, when that happened, other banks, or a lot of banks, have said, hey, you know what, I understand that there's a stress test, but we're going to adjust our lending policies so we can accommodate for that $25,000. So some lending institutions have increased what we call their debt ratios. Some have said, some lending institutions, don't participate in the stress test because they're not federally licensed, and the stress test is a federal rule. It is not a provincial rule. So we just can go to, maybe, I don't know, we'll call it a credit union that's provincially licensed, and we can give the client a mortgage that way, right? So there's always a solution. We really just need to do the work. What I find that clients really need is positive credit, wealth outside of the mortgage, and positive cash flow. What I mean by wealth outside of the cash flow is banks really want to see more so today than ever before. They want to see that people are more well-rounded, that the equity, that their wealth is not the entire equity of their property, right? So you have some RSPs, FSAs, other things that you can rely on if times get bad. I can only imagine what life would be like if it was worse than COVID. COVID was pretty brutal. So hopefully we're on to better and bigger things, which I suspect we are. But banks want to see that in tough times, if you needed to live and you needed to cash something, that you had it. And so they'll look at other things. So it's always good to not put all your eggs in one basket. Look at me, Mr. Cliche over here. Love it. So what we do for clients is another, we'll do a rent versus buy scenario. So we're often told that, hey, you know what, my lawyer told me I shouldn't keep this property, or I can't afford it. And I think that's really poor sportsmanship if people are telling you that you can't afford or you shouldn't keep a property. I don't give independent legal advice. I give financial advice. And I think that, and I say this in the nicest of ways, I'm not sure if lawyers should be giving financial advice. Maybe they should just be giving, legal advice, because we do something called the rent versus buy analysis. So if you're living in Toronto or you're living in Durham, average rent in Toronto for a house, I think it's like $3,500. If you have a $500,000 mortgage, I think this is based on a $500,000 mortgage, I believe it is, the payment is like $1,725, right? Like rates are so cheap that it's probably cheaper to own a property and carry it versus renting. So we do this analysis with people, and then the light bulb goes off. You're like, oh, wait a second, this makes sense for me to buy. So if I can qualify, I will buy a property. And so what people don't always understand is that, let's assume that your mortgage payment is $2,000 a month. And I'm using $2,000 just because it's an easy number. Arguably, $1,000 goes towards principal and the other $1,000 goes towards interest. So the $1,000 that goes towards principal is really a forced savings. It's really the equity. So each month it's $1,000. At the end of 12 months, it's $12,000, probably a little bit more, but you're building that wealth within the equity of your property. And the only person that benefits in that situation is you, the homeowner, right? Yeah, the roof might go, or you might need a new appliance or something like that. Yeah, that's life. But it's also, there's something to be said about home ownership, and typically home ownership increases depending on where you live. Outside of COVID, probably about anywhere from 10 to 15% year over year. I think COVID, there was like, north of 20, maybe closer to 30, maybe a bit of an anomaly, but it's still something. And it's something to consider. And then if you're renting, there's really no stability, right? There's always an annual rent increase. This year, the rent increase was 1.2%. During COVID, it was 0. The year before that, I believe it was 2.2, right? So when you're renting, your payments always increase. But when you're owning and having a mortgage, your payments actually decrease. So something to consider. New rules continued. This is what what banks are really looking for. They're looking for strong credit, wealth outside the mortgage, pattern of regular payments. Hey, have they been making regular payments to their mortgage? Yes, no. Yes, awesome. No, it's hard to say to a bank, hey, guess what? Mrs. Smith really needs a mortgage, and she's going to pay you the bank, the mortgage payments, even though she hasn't been paying mortgage payments in the last 6 months, and it's reflective on her credit rates. It's hard to sell. We're basically selling debt to the bank. The bank isn't going to really buy into that. Do clients need a job? The answer is no, right? So a lot of people are they're maybe a homemaker or a stay-at-home dad, and they're going to be receiving a lot of child and spousal support payments in order to live, and those payments can allow them to qualify for a mortgage. There's one bank, maybe two, that I know of that will allow you to have no job but live off child and spousal support payments and qualify for a mortgage. And we talked about the CCB, or the baby bonus, there in brackets. Types of lenders: there's the big banks, we call monolines, which is called the non-banks. B lenders, that's the alternative risk. Credit unions, mix, and private lenders. The mix and private lenders are really on the private side of things, and this is what their logos are. And so they each have a place in the market, and most of these companies, these are some of our lenders, not all of our lenders, just a heads up, it's what I could fit in a slide. And so they market, most of these companies market to mortgage agents and mortgage brokers like myself, and then we match them up with the appropriate client. This is our process. We talk about pretty much everything. When we give them an application, we're quick to respond. Within about 48 hours, clients will receive a reply. We will review the application with them, and we will just tell them where their application fits. There is point number 2 where it says client consultation, John versus Panagakos. So I happen to have one of the most famous names in the mortgage business. And so what ends up happening, there's like 3 or 4 of us with the same name. We're unrelated, but we want to make sure that the person that you're referring is the right John. And so this is why we say, if you're going to refer, please the email introduction this way. There's no confusion on the client's side of things. I don't know what my lovely grandmother did way back when, but God love her. But there's a few John Penegacos out there. I'm the tall, thin, pretty one. Just a heads up, if you were wondering. We also have something called the rate tracker. So our rate tracker is really cool, especially now that rates have decreased over the last 20 some odd months. Like rates during COVID literally did this. And so we've gone back to our database and said, hey, clients, rates have decreased. Let's help you. So our existing database, when rates pre-COVID were over 3%, if you can believe that, now they're like mid ones or lower. So we've said, why don't we just shift your mortgage over this way? And we provide an analysis for them on why it's beneficial for them to do so. And so if you've referred clients to me in the past, I say thank you. And I can guarantee that your clients that you've referred are very happy with your recommendation, because we're brokers that can do this. Your everyday bank, like your RBC rep, is never going to tell you that Scotia is having the sale. Is not part of their business model, right? But and also to that point, I can also say not every mortgage broker is built the same, unfortunately. So I'm saying all these wonderful things. These are wonderful things that my team and I do. These aren't wonderful things that every other mortgage broker in the country does. In fact, most of them don't. They just don't have the infrastructure, because having an operation like this isn't cheap, and it takes a lot of time. It takes staff, and it takes working long hours, and most people don't have that. So what we've said in the, I believe it was slide 1, trust your gut and work with the right professional that suits your needs and your clients' needs. This is our competitive edge, right? Multiple solutions. We listen to clients. We just figure out what they want. We have a lot of resources. We're also collaboratively trained. My time is almost up, so I want to go to slide 38. This is slide 38. I'm going to put this in a fillable PDF. I'm going to email it to Marianne. I hope this is done by next week. And hopefully Marianne will look at this and will say, this is amazing. John, you're fabulous, right? And so what I strongly suggest to anyone that's a mediator, a lawyer, collaborative, whatever, that you add a mortgage broker to your Rolodex. Trust your gut, have that really good relationship with that person. You want to test them, call them up and see how long it takes that person to call you back. Right? Have a conversation with them, maybe scenarios, take them out for lunch, right? How much is lunch? 20, 30 bucks. But do not send the client to the bank. Imagine the difficulties unrepresented clients face. So have you ever been on a file where the client didn't have representation? So maybe this isn't specific to mediators, maybe it is, but how difficult is it for an unrepresented person to facilitate their own separation? Almost impossible. It is the exact same difficulties that the client's walking into a bank and saying, hey, I'm in the process of a separation, can you help me? The answer is going to be like, no thanks. Banks don't get paid on service. They get paid on a transaction. So on your intake form, I suggest the following 6 questions. Do you own property? Yes, no. Would you like to keep your property? Yes, no. Would you like to purchase a new property? Yes, no. Do you own a secondary property, like a cottage or a recreational property, stuff like that, maybe even vacant land? Do you own an investment property? Yes, no. Do you owe taxes to the CRA? Yes or no? And so this is going to be made in a fillable PDF. And then underneath of this, there's going to be like 5 tips that we see all the time that clients do and common mistakes. And then we're going to provide some tips on what they should do. Is your mortgage up for renewal during your separation? What you should do. There's like 2 or 3 common questions, and we're going to put it all nicely in a PDF, fillable PDF. If your client has answered yes to any of those 6 questions, they need a mortgage broker. They need a mortgage broker to help them. This is what we've learned in the last 10 years. And this piece of paper will help not only you and your client, but it'll help your process streamline, because clients really want to know if they want to keep the house or if they want to buy a property, how they can do that. And working with a mortgage professional that can provide you that information timely is important. I know sometimes Marianne calls me. Awesome. Pick up the phone. Sometimes we'll do stuff over email. Amazing. But sometimes you just need information right away. And if you're waiting days and days and days, that person is not the person for you. We in our world, we call it a partnership. So if I call a bank, I know that I'm going to get a timely response because we have a partnership. We send them business and they also give us service and they give our clients approvals. So this is how I believe people like the Mariannes of the world or the mediators of the world or anyone helping a human being, that they need a positive relationship with people and that they can call them up anytime. And that is pretty much my presentation. I hope you've learned something. I hope you've liked it. And happy to answer questions. There's 25 things in the chat. Oh my God, it's gonna be great.
Don't worry. I've logged things for you. Don't worry.
No, perfect.
Yeah.
Always like homework.
Yeah. No homework. No homework. One of the questions that came up that we had a bit of a chat about was the idea of needing a signed separation agreement versus a signed either kitchen table agreement or a signed MOU in one example that was given. What's your experience with like really kind of casual separation agreements that people come up with themselves? Mediators aren't signing. We're not signing anything with our clients. So clients, if they do it on their own, any luck or hard?
There is some luck. It's not easy, right?
Yeah.
There's a few more steps to it, right? So when we approach a bank, we're asking with a signed MOU or a kitchen table thing or kitchen table agreement, we're asking the bank in this particular situation to go outside the norm, right? The norm is signed separation agreement with independent legal advice, right? Really important, independent legal advice.
Yeah.
But when we go outside the norm, the bank might say, okay, well, go get it notarized or go have a lawyer review it. And then, you kind of need that threshold.
Right.
And so it's important that, can we do it? The answer is yes, but it's not going to be as fast as people want it, right? Because you're asking someone to adjust their process, being the bank. And so, and there's not a lot of banks that are going to do that for you, just a heads up. So there's additional steps that they may need the client to do. So the answer is yes, but it's also maybe.
Yeah. So I mean, it's a more durable agreement if it's it has independent legal advice. It's called a separation agreement. It's something they can just rely on later. So sometimes it's, there was some chat about like someone had to get it done within 2 days. They had it done one way. They had to get it done another way. I mean, it's possible to do all of these things. So it's tricky though, isn't it? It's like when you get separated, there's so many rules around like and additional rules, right? And recently I had clients who just didn't tell, they sold their house and got new mortgages. They didn't tell anyone that they said, it's no one's business who I'm sleeping with. I thought, oh, that's interesting. But don't they have to ask you a question if you are separated? And didn't you kind of not tell the truth there? But anyway, I didn't get into it, but I find it interesting.
And also keep in mind, right? Like it's always best to be honest with your mortgage broker or your representative or whoever, because there is a solution for everybody, right? This isn't just like a sales tactic. We just have to match lender with client based on the unique circumstances. But when someone says, "Oh, it's none of my business. It's none of your business to know who I'm sleeping with," your words, whatever the case is, and sure, right? It's not part of the application process. Like, I actually don't care. But guess what? The person lending you the money,
they care.
Does.
Yeah.
And so they rely on something called the risk. And yes, the bank has oodles and oodles and oodles of money. And guess what? They have oodles and oodles and oodles of money because they're risk adverse.
Yes.
So not answering their questions, you're just wasting their time.
Yeah.
So it's in a nice way, just tell them what they want to hear or the correct answer.
The correct answer. Yeah. Okay. So can you tell us a little bit more about the two-tier buyout? So I do deferred sale of the matrimonial home with equalization payments, some like a lump sum paid up front. Is that two-tier buyout?
Yeah. So you can do that. Right. And so the bank will want to know, okay, so let's assume it's a $200,000 buyout today, and maybe it's a $200,000 buyout down the road. So we have to accommodate for that extra $200,000 in the application for down the road. right?
Oh, okay.
Right, we add it into the app. Like they're not going to have a mortgage for $200,000 more, right? But we need to accommodate for it in the application so everything is transparent. Bank knows what's going on because they're going to see it in the agreement anyway,
Yeah.
right? And so we put it in there, and then there's a calculation that's involved in that we add only for the application. So let's assume that the existing mortgage was 300,000. The first tranche or tier of the buyout is 200, so they need a $500,000 mortgage. We also need, and then they're going to be receiving a $200,000 lump sum later. We have to accommodate for that 200 within the application, but they're still only going to have a mortgage for 500.
And then does the other $200,000 kick in after a certain amount of years, or
it depends what's in the agreement. They will not pay interest on that, right? They're only paying interest on the fund that they're using.
Okay.
But internally, we need to accommodate for that 200.
Okay, I need to learn how to draft those because I've only ever done deferred sale where it's like they just decide to jointly own the property, but one person needs a wee bit of money for doing something else, so they get like this advance on the equalization payment. I need to learn that. If you have any draft agreements that show two-tier buyout with good clauses, share away.
Sure, I will. Yeah, there's a few of them, right? It's happy to chat. Happy to chat.
Okay, good. Okay, and I'm super interested in like the case that we did recently where we had child support and it was paid at like, I was kind of mystified a little bit because it's like dad had to pay this amount. What difference did it make to the bank that he wasn't paying that monthly? He did it like how did that help him? It still had the support in there as a lump sum for child support, but how did it help him get the mortgage he wanted?
Right. So the way banks look at any mortgage is it's a snapshot in time, right? Okay. So when people are, and I will use the example of let's assume Marianne is a full-time salary employee. Let's assume she's not self-employed. I'm not sure what her employment status is, but let's just assume she's a full-time salary employee. Yeah. So the bank looks at a job letter and a pay stub. Awesome. It's a snapshot in time. Marianne, hopefully, never gets fired. She may quit. She may get fired. Like this just happens, right? Like people quit jobs every day. People get fired for a whole bunch of different reasons, right? But the assumption is that Marianne is going to be employed. But we don't know what happens in a month from now. So when there's a separation agreement that says, guess what? And I think you have to come up with better wording, not you, Marianne, but like better wording for the separation agreement. It doesn't necessarily say it's prepaid. It's just that there's no child or spousal support payments now.
Okay, right? Snapshot.
Right. So the snapshot is that there's not a payment today.
Wow.
Sure, it's reviewable, but so is my argument is so is child and spousal support payments that are being paid today. Yeah. Right. So who knows what's going to happen in 12 months when it's reviewable or when they're exchanging their T4s or their NOAs or whatever. Right. So it is a snapshot. So that's I think the best way to approach it.
Okay, that's helpful. I wasn't sure. So it's like even like on financial disclosure, it's a snapshot on the date of separation. So mortgages are looking in a similar fashion. They're like, on this date, what are your monthly dues? And that doesn't get included because it's done in this lump sum. Okay, I understand now. That's good. I cannot believe it's 2:00. John, thank you so much. The people are asking for the presentation. Will you share it?
Hard no, but
okay.
So I will explain. The reason why it's a hard no is because I've shared it before, and someone gave it to somebody who is someone like me, and has then used my hard work for themselves. But here's the good part. Okay. Probably in a week, I have a synopsis of this. This is going to be trimmed down to about 8 or 10 slides. Okay. I will give all of that to Marianne, and then Marianne can distribute to the wonderful people. Okay. And so it's not going to have a bunch of the meat and potatoes, but it'll just have fine. Like little tidbits for people to enjoy, and I hope people understand it.
Oh, that's totally understand. Sorry that happened to you, and
no, it always happens.
none of our members are going to do anything like that, right?
Imitation is the best form of flattery.
Yeah.
Right?
Yeah. OAFM knows all
Someone
about
wants
that.
to look like this. I understand. I get
See, the
it.
jokes do get better.
Right? Yeah.
Thank you so much, John. It's been fantastic. I will talk to you soon.
Yeah,
Go
no problem.
Raps.
Anytime. Yeah, thanks for having me. Have a great day, everybody.
Okay, see ya. Bye. Thank
Yeah.
you.